Greetings and welcome to the newest episode of Rice Crypto. I'm Rice, and today I am joined by Jack Levin. He was the 21st employee to work at Google. He is a serial entrepreneur, an angel investor, and the founder of several cryptocurrency projects: XEN Crypto, XENblocks, and the XEN blockchain, which we will be learning all about on today's video. All right, ladies and gentlemen, today I am joined by a first-time guest, a conversation that I'm definitely looking forward to. I need to shout out CryptoNeck for hooking me up with this gentleman. Today, I am joined by Jack Levin. He's got an interesting history. I want to let him introduce himself. I will say that he was the 21st employee at Google. He is the founder of the Fair Crypto Foundation, XEN Crypto, XENblocks, and XEN blockchain, which we'll be talking all about that on today's show. Jack, welcome. How are you doing today?
Thank you. Very good. Very good to be here.
Well, again, thank you for your time, man. I greatly appreciate. Do you mind, for people who might be unfamiliar with you, to introduce yourself? And as you're doing that, I'm going to be sharing your X account and a little bit of a bio from XEN Crypto's website so people could follow along. And I will have links down below for everything that we share on today's show, my friend.
Sure. Sounds good. So I'm an early Google engineer. I started at Google in 1999, met the founders at Stanford, quit Google in 2005, started a couple of startup companies. One of them was imagehack.com. There was another company called Vifrog.com that powered images and videos for Twitter for about 2 years. Then there was Nventify.com, which was image delivery and optimization for e-commerce stores like Nordstrom, Macy's, and various other online e-com websites. In 2011 or so, I started mining Bitcoin. Actually, those are the pictures with me and the Google founders. So that's like where the picture on the right, that's Sergey. And I think I am probably 28 and he's maybe 30. And we're
Oh,
skiing
wow.
in Tahoe. And the picture on the left, that's Larry Page, also the founder of Google. And he's 52. I think I'm 50 in this picture, maybe 49 and 51, something like that. They're a couple of years older than me. And both of those pictures are done in Tahoe because we love Tahoe and we've been like probably skiing there for years now. So anyway, like those are the guys that I worked with to get Google running faster. That was my first mandate from the president and the CEO, that
Yeah.
Google was.
This is impressive, man. Is it that you designed Google's cloud network, single-handedly designed the first 3 data centers? You oversaw early partnerships with Netscape, Yahoo, AOL, ASK, and many others. And the thing is, we talked before we started to record this. We're around the same age. We're in the 50-ish bracket. So Netscape, I completely remember the CDs and all, and the CD-ROMs and all that, even for AOL. So this kind of brings back so many memories. I'm impressed by this, man, by your resume. And then
Thank you.
what you're doing with the crypto stuff. The startups are really interesting. I was really impressed that because I've talked to a lot of people that have been in the tech world that were introduced to Bitcoin very early on, but very quickly dismissed it. I have
Yeah.
an uncle that worked for IBM.
Yeah.
He says to me every when I see him, he's like, I wish, and he still hasn't bought any Bitcoin yet. Still,
Well, that's the majority of the world. I mean, and that's actually what I mean, great for the early adopters because the majority of the world hasn't been onboarded yet. That just means that Bitcoin probably has like 10x in the next 5 years, just due to that fact.
no, I agree. And
So
then the fact you were early forward thinking enough to start mining in 2011,
yeah,
using data centers, which is, obviously what the direction it took. You were probably one of the first people doing that, data centers, I would imagine.
yeah. So I had some data centers with spare capacity, and I figured that I would just run Bitcoin miners to pay for the data center costs, which how it's been for like 2 or 3 years since we started mining. And I also remember like people who worked with me, I would actually give them Bitcoin just like so that they can have it for free for nothing. So
Yeah,
I just spoke.
it says on your website that you would that his friends, meaning your friends, would occasionally receive Bitcoin as a gift from you, and even one recently bought a house with it.
It's true, yeah, yeah. I think I gave him like 5 Bitcoin, and he sold at 60,000. He should have kept it though.
Should have, but that's still a nice gift, man. To turn out into a house, that's nice.
Yeah,
So I just wanted to emphasize the fact of your background, the tech background, understanding, and then being so early in the crypto game and the stuff that we're talking about, especially Zen Crypto, is not a new project. Now, X1 blockchain, that is new. It's in a test net area, which we'll get into. But
sure.
I just want people to realize that this isn't just some new project, just some guy trying to take advantage of the crypto hype, that you've been in this space for, it seems like very close to the beginning.
Pretty close. And I think I still have an account on bitcointalk.org where the early Bitcoiners talked among themselves about the tech and stuff. And
Okay.
so I just recently checked it. It's still active.
The friend that got you involved in Bitcoin, is he still involved or introduced you to Bitcoin? Is he still did he buy? Does he still own? Do you still talk to him?
Yeah, I still talk to him, though he was not a Bitcoiner. He was basically making fun of Bitcoin. Uh, and I just got serious about it when he mentioned it. So he never got into it, I don't believe. I mean, I'm sure he's in it, uh, somewhat right now. But back then, it was kind of like, hey, did you know you can buy bazookas with Bitcoin? I'm like, great, that's an awesome market fit. I want to mine some.
That
So
is
that's how it started.
very
Yeah.
interesting, man. All right. So again, very impressive background. You got involved in crypto, and then ultimately you decided to start the Fair Crypto Foundation. So, can you explain what the Fair Crypto Foundation is and what led into the creation of Zen Crypto?
Sure. So I was working with Ethereum pretty much since the beginning, and then like one day, CryptoKitties launched, and Ethereum just you couldn't use it anymore. It just got so busy, and that was like the first uh, indication that Ethereum probably cannot scale. And so that's kind of like piqued my interest in the scalability of the blockchains, and I'll speak more on that later. When CryptoKitties did not only got Ethereum very busy that it became unusable, it also pointed to the fact that there could be a lot of money made on Ethereum. And so the ICO wave of 16 and 17 kind of like indicated to the world that, by the way, like not only that Ethereum is worth investing into, but there's also all those coins that are coming out, and there are thousands. And unfortunately, 99% of them were scams. They would pump and they would dump, and the founders would pre-mint the tokens for themselves and then dump it on the community. So like first there was like a cycle of hype, everything went through the roof, and then like everything just got self destroyed or collapsed on itself. So by 2018 and 19, it felt like Ethereum is like the scam machine that is optimizing for DeFi rag pull technology, like so to speak. And I'm talking about specifically just token creation and token pumps.
No,
I'm not
yeah,
really.
I was there in 2017 with the ICO craze. I still would say that we still probably have 90% of the projects in crypto are
Yeah.
in
And,
that same
and so
category.
and so after like thinking more about it and given my Bitcoin roots, what I saw in Bitcoin personally, that it didn't start with a pump. And it didn't really dump. I mean, like there were cycles where it would go to like 5,000 or 2,000, then it would go back down to 300. But it wasn't because there was a scam action. It was just like regular market volatility. So it wasn't that somebody's capturing a way to dump on the community, like on Bitcoin community, for example. And so I thought, what if there was a token like that on Ethereum, the token that you cannot dump technically? In other words, nobody is there holding the bag over your head and waiting for an opportune moment to completely liquidate and leave and disappear. And obviously, what made sense is to build the token with the tokenomics that's very, very similar to Bitcoin. And so Bitcoin started with 0 coins, basically. Well, obviously, I mean, of course, Satoshi mined like 1,000,000 coins, but they haven't moved like in forever. But you can technically say that the fairness of Bitcoin was definitely there from the beginning. And as the world got on board, it just got more valuable. But there wasn't a situation where like somebody held like 20% or 30% or 50% and just like was dumping on the community. And so I thought that we should borrow the Bitcoin's aspects and plug it in into a smart contract on Ethereum and launch a token called Zen. And so Fair Crypto Foundation was born out of that idea.
Did the name Fair Crypto come from the fact that like fair launch and fair principles in cryptography?
I mean, I think I was just doing research in terms of what the fair launch meant for crypto,
Okay.
and I believe that Bitcoin was fair. It was fair in a way that nobody knew what it is, and then eventually people figured it out. But there wasn't an element of unfairness there, and I just wanted to reproduce it for Ethereum, where the founders, number one, don't have any coins. Like for example, I was one of the minters or miners of Zen myself, and there were many people out there who understood what the project stands for and also were minting Zen with gas. And basically the way that it works, you just mint Zen with gas money. So you spend gas only. You don't have to buy it. You can buy it if you want, but most of the OGs in Zen world have minted Zen. And then you specify how long you're willing to wait. And the longer you can outwait the rest of the people, the more tokens you make. Which is kind of like built-in DeFi or built-in APY, if you will.
Mm-hmm.
So you don't get the tokens right away. You can wait for up to 450 days. And so the longest duration of time you can wait, the more tokens will be minted for you at the end. And so that makes it impossible for somebody to pre-mint a bunch of tokens. It's just gonna cost them so much money. So because if you're trying to front run this 450 days, let's say you're doing 100 days or 30 days, you're gonna get a fraction, like 5% of the tokens the other person gets. And so in terms of costs, you would have to spend 20 times more in Ethereum on gas money just to be on par with somebody who is waiting for a long term tokens to be minted. And so that's how the people actually have the protection against this sort of like front running from the minting side. Now, of course, if you're a whale and you have like disposable millions of dollars in Ethereum, you could buy it and you can manipulate the price. So that's impossible to stop. And part of crypto being fair is that there's opportunity for anybody with money or, you know, to get as many tokens as they want, which they can hold and then sell or do something else with whatever they want to do. Zen also mints NFTs, and there have been 5 million NFTs minted. They're called ZenFTs. And those NFTs are interesting. You can mint a staked or staking NFT where you get about 16 to 17% APY, depends on when you started that process. And that NFT becomes a financial instrument that can actually allow you to sell your stake to someone else. So I can stake a billion Zen for 17% APY that has a duration of like, let's say 2 years.
Mm-hmm.
And the longest duration is 1,000 days. So it's about like 3 years or so.
Yeah.
So let's say that for this 1 year staked Zen, I can actually sell you that Zen NFT that you can later claim your rewards at maturity with my principal too. So I can load the principal into an NFT. It will be yield bearing, and I can then liquid sell it to anybody who wants to buy it on OpenSea or Blur
Without having to unstake it, send it,
exactly.
and restake it. So it's allowing for the
Yeah.
stake process to be uninterrupted and just transfer of ownership. That's interesting. I like that. That's cool.
So think of this NFT as a title to the ownership of your future Zen that's earning yield plus the principal. So it becomes like this secondary financial instrument that you can trade and speculate on. Like for example, I can go on Blur and buy a bunch of those Zen NFTs right now that are making Zen tomorrow, but they have started their process of minting, let's say 400 days ago. So they're very valuable because those people waited 400 days. Now they put it on the market and they're maturing in, like, let's say 2 or 3 weeks. So I can buy that time that they have waited for in the form of NFT, and I get all the Zen that comes out of it. And so obviously the closer you are to the day of, to the date of maturity, the more expensive it becomes, because it's a de facto uh, kind of like a mature bond, if you will.
Yeah, no, that's kind of what I was thinking in my head, but just didn't get it out.
Yeah, that's exactly what it is. It's a bond like system that can carry principal and interest from the NFT.
When Zen was originally created, because ultimately, I mean, I love the fair launch idea. I saw the first principles of crypto and the no admin keys, which we could touch on more. I don't know if when you first had this idea when it was created, did you know you were going to go multi-chain, blockchain agnostic route, or were you initially just going to build on Ethereum?
So initially it was just Ethereum, because to be frank with you, we didn't even know if it's gonna fly. And just looking what happened on Ethereum, we just thought that, well, hey, Ethereum has this gas problem. Why not go to Polygon? They don't have a gas problem, or Binance. They don't have a gas problem either. So that allow us to actually tap into other communities on those chains that could do the same thing with Zen, just a different flavor of it. And so, yeah, this is the website that shows all of the um,
Different chains.
different chains where Zen exists. Yeah.
So what is that, like 16? 1, 2, 1, 2, 3?
So
What
this is,
is
I believe, 13 EVM
13?
chains.
Yeah.
Plus there's Bitcoin. There's another flavor of Zen we call VMPX. It's in the form of a BRC20 token. It's not listed here. Here it has its own website, vmpx.io. By the way, you can check it out, vmpx.io.
Hold on. Will you repeat that?
Yeah, so V as in Victor, M as in Mary, P as in Paul, X as in X-ray.
.com?
.io.
.io. Okay. I want to tell people while this is loading, I was doing some research on this project, and people can probably gauge that this is a very immense project. There's a lot to not only Zen but X1. This is a lot. That's why I need to have this conversation with Jack, and I want to let people know. I did tell Jack that the intent is to have more conversations so that we can deep dive into some of these things a little bit more, but I really wanted to kind of give a basic introduction to Jack, to Zen, to XENblocks. I know we're going to touch on that, and the X1 blockchain, and anything else that you want to touch on. But I just want people to realize the complexity of what we're dealing with here. And I got this website pulled up. What is this, man?
So when BRC20s came out on Bitcoin, we really wanted to explore to see what's possible. So we launched VMPX as a fair launch as well. And it was the first time on Bitcoin. Yeah, like if you look at the chart, you can see VMPX launching, and then the blue line is the transaction fees that people have paid to actually to mine it for themselves.
Yeah, this is
It
like
was
the
the first time
Ordinals
in
frenzy.
it was the first time in history on Bitcoin where the miners actually got more money from the fees than from the Bitcoin rewards.
Yeah, that's crazy.
So that was a very like pivotal milestone for BRC20s. And so VMPX is like this token that has limited supply. It doesn't have any DeFi in it. It's not like Zen. It doesn't have yield. So it's a very, very special token. I think it's like number 2 held token on Bitcoin, which is pretty significant.
Yeah, no, it is. Considering, I know we're still early when it comes to ordinals, runes, BRCs, stamps as well. I like stamps. I think they're pretty cool.
Yeah.
But yeah, I think we're very early. And I think now that I'm thinking about it, I think I have seen the XEN Zen name and just didn't correlate them together. But it's not called Zen though. It's called VMPX, which is, I guess, like Vampire Zen.
Yeah.
I'm looking at Count Jacula over here.
Count Jackala, that's me.
Has anybody came out with that yet? Count Jacula?
Like a couple of years ago, yeah.
Okay, so I'm not original. I thought that was original. Okay. All right. So you guys are on 13 different blockchains,
Plus
utilizing
Solana, plus Bitcoin, so that's 15 actually.
15. Okay. Well, damn. That's a lot. That's a lot. And ultimately, all of this led into the creation of XENblocks and then ultimately the X1 blockchain, which is in testnet. Is there anything else that you want? Because again, we could do another conversation, go in depth with this stuff. Was there anything that you wanted to touch on in regards to Zen crypto and anything Zen specifically related before we move on to talk briefly about the XENblocks and then go talk about what everybody wants to hear about, which is the X1 blockchain?
Well, I think just in conclusion, Zen is modeled on Bitcoin in terms of fairness and in terms of mechanics. It is actually almost it's been in a top 3 token on every blockchain we launched on, which is pretty incredible. Let's actually show this to people real quick. If you go to etherscan.io, I think.
Etherscan.
I'm just curious if it's still top 3 or not. And
What
then
I
if
do
you
is put in Zen.
if you go to the resources menu,
Charts and stats, top statistics.
charts, and actually it's top statistics. And then click on tokens on the
Tokens.
yeah, right there. Click on 7 days.
So
We get an average for 7 days. Yeah, so check this out. The top tokens by unique senders. Zen is number 3. So we have stablecoin, then it's Zen.
yeah,
Pretty cool,
see
right?
that. Yeah, see that.
And if you scroll down, there's like more aggregated stats. Like in here, I mean, like this is number 5. I guess Pepe on chain is winning, but like wrapped Ethereum obviously will have the most because people use it for trading.
Right.
And we're right next to Pepe, I guess. But we're sharing the stablecoin club, like so to speak.
Is this just specifically Ethereum? It's not Polygon.
It's on Polygon as well.
I mean,
It's
I'm
on
just saying, as far as the stats that we're looking at, this is
It's
just
everywhere.
specific. This is
It's
for everywhere, or this is
everywhere.
just Ether?
Every chain is like this. In some cases, it's more.
Well, I'm saying this website though, this is only including just.
Oh yeah.
Ethereum
This is
blockchain.
either scan just Ethereum.
Which I mean,
but
and that in and of it, and that alone is impressive considering how many ERC20 tokens or
yeah,
ER whatever number you want to call the token.
yeah. So we're there with all the heavy lifters, which is actually pretty amazing. So that speaks volumes, I think, in terms of the fairness of the token, because it can touch so many lives and so many wallets, like so to speak, because you can get into it and start minting it when the gas is cheap, so you can actually trade the gas arbitrage. So if the gas is like 5 gwei, you pay almost nothing to mint your Zen tokens, and if the gas jumps to 50 or 100 gwei, then nobody can mint because all of a sudden it's like 10 times or 20 times more expensive to make new Zen. So it's basically plugged into this like sort of difficulty of Ethereum being slow. So you're basically encoding the cost of gas into the Zen token that you can trade later, which is pretty interesting. So
one question I have in regards to Zen crypto is with the minting process, is that only on Ethereum or can you mint on each blockchain?
each blockchain.
Okay.
Each blockchain mints their own version.
I didn't know if it bridged over, and that's how.
No, there's no bridge to Zen. Every blockchain has their own flavor of Zen. So, like for example, Phantom has FM Zen, and then Polygon has M Zen, and Binance is B Zen.
So you just basically infiltrated Zen protocol, Zen crypto inside of every single blockchain. It looks like.
That is true.
That's nice. It's like infecting blockchains. That's beautiful.
Thank you.
Look, and I know this might be an advanced question, but since you guys are in testnet with X1, when X1 launches, and since Zen is blockchain agnostic and multi-chain, will there be a Zen on X1?
We think there will be. It will have their own its own flavor. So SolZen, by the way, if you go to SolZen.io, is the Solana flavor of Zen. And that project was very interesting. So solzen.io.
Yeah, I want to keep typing in Z for Zen every time I hear Zen.
Yeah. So that was very interesting. If you
Proof
click on
of
the leader,
work mining on Solana. Interesting.
yeah. So Solana is different, and there was no point using their fees as gas because their fees actually are not dynamically adjustable. And that actually will lead into the X1 conversation at some point. But we basically modeled Bitcoin mining algorithm directly into the Solana's program. So Solana program was mining hashes
Wow. Okay.
on Solana, and you get rewards for finding those hashes. So you see that the yellow hashes 420 and 42069.
Yeah,
So
great numbers, by the way.
42069 is harder to find because it's actually 5 characters or 5 digits, and you get this thing called super hash that gives you more soul zen in terms of mineable zen. And so the process is also fair because it's basically using Solana's infrastructure to mine coins, very similar to Bitcoin, except like with Bitcoin, you're looking for target hash. Here, there's no difficulty. There's only like 2 hashes you're looking for, and nobody can like front run it or manipulate it or hack it. It's always fair. So that's how SolZen came into being. And so this is kind of like the variation of Zen on Solana. And so when Solana launched, there have been a bunch of tweets that I actually made, a bunch of posts. SolZen project took over 30% of Solana's capacity at the time of launch and remained at that capacity overtake for about 5 months. And so Solana guys noticed, and they actually didn't know that their chain could be used for mining hashes like that.
Yeah, that's something I discovered too from CryptoNeck. Was it seemed like there were some things that you had done that was actually beneficial and helpful to the Solana ecosystem, blockchain itself.
Yes, and so SolZen existence and its popularity reduced the spam that was hitting Solana because it reduced the available compute for spammers to take over. And so when we took over the remainder of the available block space, which is basically measured in compute units, spammers were priced out of their ability to make money with arbitrage and sandwich attacks on the blockchain. So we became a de facto filter by soaking up all of the compute for SolZen. So all of the spammers were gone because they couldn't make any more money or money anymore. So
Very interesting.
yeah, it's a pretty cool project. And if you go scroll up for a bit, just a little bit, and you'll see that there's a
Up or
link
down?
to leaderboard. Yeah, click on the leaderboard.
Oh, I'm
Go
sorry.
up.
Okay, leaderboard. Okay.
Yeah, right there. Yeah, and so this leaderboard is frozen because the Solzen has been minted out. So 58 billion and a half Solzen has been minted, and it's done. There's no more Solzen can be made.
Yeah, that's what I was going to ask you, is if there's a max supply on each one and how it correlates overall. But it's like it's almost like they're all kind of separate to each other, and they don't.
They're all separate. They don't
Yeah.
share supply. Yeah.
Is there a max supply for each one?
Technically, no. Specifically for Solzen, there is a max supply because we were targeting the only so many blocks to run,
Okay,
and we ran out of blocks,
makes
and
sense.
we're done. With Zen, it's an 8-year supply that's degrading its ability to produce Zen every year. So every year, it's like Bitcoin happening, but it's not 100 years, but it's 8 years.
And I do want to just also say that I don't think that it's a bad thing to not have a cap or a specific max number of tokens, because Ethereum, XRP might. There's Doge. There's plenty of cryptocurrencies that don't have a max supply.
Most don't, and with Zen, it just becomes what they call trailing inflation, which is like less than 1%.
And honestly, I would much rather use a cryptocurrency that is inflationary for everyday use than deflationary, something like Bitcoin, because that's where Gresham's law kind of comes into play. I know Bitcoin was supposed to be designed to be peer-to-peer cash, but it's like it's rare and it has value. So I'd rather spend Doge or Zen in this aspect to buy my coffee than Satoshis and than Sats.
Yeah, I mean, like it's kind of a complex economic model. I think Bitcoin is just valuable because it's hard to produce, and
Yeah.
there's the demand for production is very strong, and you can't just like run a little device at home and make it. Where with Zen, you can actually continue to do that. But I tell you what, like it started 2 years ago. In about in 2 years, it's gonna be at half point. People who join at half point will make half Zen versus
And-
people who started early
okay.
because of the contracts formula that reduces the amplification. So amplification is always getting reduced. It started at this AMP, which is amplification at 3,000, and it's 3,000 days. Every day it ticks down by one. So it's accelerating down to 8-year mark, at which point it will make like trickle of coins, and you can't make any more Zen. So
One other thing that I want to add that I think is really cool that I kind of grabbed from videos is that by being multi-chain, it gives the user an opportunity to experience different blockchains and how they work, how fast they are, and things to that effect. I think that's very important because it's almost kind of got its own like education built in for the entire crypto ecosystem, or at least to give you a lot more familiarity with different blockchains than most people would have without this kind of this idea. So that's
yeah,
something.
that is true. And also, like for example, in Avalanche, you can just pay a fraction of the dollar to experience Zen. So same with Phantom and Optimism. So
Cool. Well, after this interview, I'll be thinking about ways that we can expand on talking about Zen in a future conversation. What is XENblocks exactly before we get into the big thing that everybody wants to know about, which is X1 blockchain? What is XENblocks?
so to be honest, XenBlocks was just a weekend project that just got very popular and became like this mega mining experience for people who wanted to mine coins. And so XenBlocks is a modified Bitcoin like mining system that allows people to use their GPUs to mine hashes that convert to this coin called Zenium. And Zenium will land on X1 and become a liquid token there, where you can like send it to other people, you can trade it, you can buy it if you want. But the idea here with XenBlocks is we took the Bitcoin code and modified the SHA-2 algorithm, which is not ASIC resistant, to something called Argon-2. Argon-2 algorithm is memory hard, so it requires a lot of memory, something that ASICs cannot do. So you cannot be front run by whales that buy specialized ASIC systems to mine those coins because of the memory requirements. But GPUs work fine. So
Who created this algorithm, the Argon?
I'm sure ChatGPT knows. It's just probably
Oh,
some
I did.
Russians.
I was just curious if it had anything to do with like I didn't know if like you created this or if it was something to do with like people within the team.
No, it wasn't me. I was researching the best hashing algorithms in the wild, and it just happens to be the winner of password hashing
Okay.
methods. And I just thought that I would adapt it for hash mining using proof of work. So XenBlocks is a coin that's based on that can be mined with proof of work, which will become a liquid coin on X1.
Okay. So it's not just a weekend thing that's done
No,
and over with. It's
not
something that's
anymore.
okay.
And if you click on leaderboard, you can actually see like the action there. People are mining right now.
Okay.
So there's mining block rate. That's how many hashes are being mined per minute. So we're targeting 1 hash per second. Current number of miners is 409. That's how many GPUs are running.
Mm-hmm.
And then the difficulty is the factor that manipulates the memory requirements for the hashes to be produced at the rate of 60 per minute. And so if you scroll lower, you can see everybody's using like Ethereum style addresses and they're mining blocks in here. And there's also like merged mining going on. You can mine Zenium, you can mine this thing called Zuni, and also you can mine superblocks. So superblocks is the third column. Superblocks are very rare and hard to find, and they're worth more. And so they probably will convert into
Is that what these X blocks are here?
XBLK is super block, and
Okay.
then XNM is your future Zenium reward on X1 blockchain for the blocks you have mined, basically.
Okay. Okay. Yeah, that's very intriguing, man. You got some interesting stuff going on within this whole ecosystem, man.
Thank you.
So we have X1 blockchain, which is a layer one blockchain. So people can think about things like Ethereum and Solana are layer one blockchains. Bitcoin, I think, is technically a layer one blockchain, right?
Yeah, but it is a blockchain for sure. It's just not the kind of like a smart contract platform.
Right, right. You can build smart contracts seemingly on the a second layer, I guess.
Yeah, you can have layer 2 settle on Bitcoin, but Bitcoin itself does not execute smart contracts. Not yet anyway.
No, no. But interestingly enough, for a quick history lesson, had the Bitcoin core team actually listened to the proposal by Vitalik Buterin, maybe this would have been done on Bitcoin and we would never had Ethereum. So that's the reason why we have Ethereum, is because Vitalik did want to try to introduce smart contracts to Bitcoin, and core didn't want anything to do with it.
Yeah, not at the time. Still
No,
don't, obviously. They hate BRC20s, by the way. So
no, I know. I mean, I'm very, and I'm sure it's another conversation for another day, but I'm very much on the side of a Roger Ver, a big blocker. It makes more sense to me. I've heard a lot of the arguments. I'm not exactly a huge technical person, but I know enough to be able to understand like most of what you've communicated to me today. When I first got into crypto, though, I could never do this. My first technical interview was with somebody that was technical, was Tron Black from Ravencoin.
yeah,
And
I
then
heard about that.
I did something with Ricardo Spagni, Fluffy Pony, who used to be the maintainer for Monero.
Yeah.
And talk about like just complexity of technicality. It's
Yeah, that
very
stuff gets
interesting.
complicated fast for sure. But
So actually,
hopefully, with our interview today, we can shed some light on why things the way they are.
no, I definitely look forward to that. So X1 is a layer one blockchain. What I gather from you from the very beginning is that this is a code fork of Solana with modifications and changes.
Exactly.
Um, so it's taking the actual source code, the code itself for Solana, and altering it. And just to kind of give an example, that's how Litecoin was born, and that's how a lot of other cryptocurrencies in the older days were born, was using the code. And I say code fork very specifically because in 2017, when we had the blockchain war, the block size wars, and the birth of Bitcoin Cash, that's what we call a hard fork. And there's a difference between a code fork and a hard fork. A hard fork, you get airdropped equal number of coins that you have from both chains, whereas a code fork is just a kind of its own new thing starting out. So you took the Solana ecosystem, which has never been done that I know of, and forked it to create your own X1, your own layer one blockchain. Let's talk about that.
Sure. Yeah. So I believe SVM is probably one of the most performant virtual machines out there in the world, and part of it is due to the design of the parallelization of the transactions that the virtual machine can execute. Like, for example, if I send you coins and then Mary sends coins to Kathy, uh, those two transactions, they're not actually waiting for each other, which is how they would wait for each other on Ethereum. So on Ethereum, it's a single threaded EVM that will always queue those transactions one after another. On SVM, A to B and C to D, as long as they're not interdependent, can be done in parallel. And so that what gives the SVM, its tremendous speed, and also ability to use more hardware. Because on Ethereum, you can run the server, but you're only using about 5% of that server's capacity. On SVM or on Solana, the nodes are used at about 80% of their capacity. So for the dollars spent, assuming, let's say, all the servers are equal, the throughput and the use of the bare metal is much more efficient on Solana per the cost of the server. So the cost of the server could be, let's say, $300 a month for Solana and $100 for Ethereum. And Ethereum will still cost more per dollar spent because transactions are so slow. You see what I mean?
Yeah.
So you're running a node on Solana for $300 a month, but you're doing a factor of magnitude greater number of transactions.
Right.
Like
You're
100,000 transactions per
faster
second.
throughput. So it makes sense.
Yeah, we're talking about like 1,000-fold, 10,000-fold an improvement for the difference in dollars, like being only 3x. So we took the Solana's SVM code or the validator code basically and started adjusting it to actually incorporate a lot of things that I believe will run the blockchain better. One of which that I have a particular dislike about on Solana is the nodes that join the network to become validators. They actually have to pay about 1 Solana per day to validate the chain. And 1 Solana per day today is $220 per day. So if you
That adds up.
multiply it by 30, so what do you get? Like $66,000 just in Solana that you have to pay every month.
Pay to play.
Right. And so if you multiply it by whatever another 10, so it's like $70,000 a year.
Yeah, that's ridiculous.
Assuming Solana actually stays at $220, I think it's going to go like to 300, 400, maybe 500 within the next few years. And so that $70,000 per year now becomes the extra cost on top of the technology that you need to run to be able to even participate in consensus. And so that barrier to entry actually causes the chain to be more centralized in a way of that only the whales can afford to run the nodes. But if only the whales can afford to run the nodes, then you're basically only catering to a very special group of people, which is not what were the tenets of the blockchain design to begin with. So like here, I'm obviously siding with Ethereum because Ethereum's able to say, hey, you can use Raspberry Pi, or you can use like something very inexpensive, or even if you do have a high-end node that costs you $300 a month, which is going to give you a juicy node, you don't have to pay this sort of a club membership to participate in blockchain validation. And so those are one of the changes that we have made. First, we remove that payment that the nodes have to do. So anyone can join X1 blockchain without actually needing to pay $70,000 a year.
I like that.
And that pushes the chain to be more decentralized because people have more opportunity to join the network and validate and make blocks, verify blocks, do all those things.
Okay. I mean, that totally makes sense. And it kind of, the things that you're talking about fixing in the code is kind of some of the things that I think that I've had more of a gripe with.
Yeah, it's not really like anything that's wrong with the code. More like it's an adjustment to the economic engine of the chain.
That makes sense.
So the code itself is beautiful. It works great. And we looked at the majority of it and we were very impressed. That's obviously why we chose to fork SVM. But also, originally, it wasn't even my idea. The founder of Solana, Tolly, he said that, hey, everybody should fork SVM. And he said that you should run a public testnet. So we did it in a week. So as soon as he tweeted that, I sent him a link with X1 Validate.online that actually shows this alternative Solana's worked network running.
When are you guys aiming for an official website and launch of the X1 blockchain? Because since it's currently in testnet.
So there's many things up in the air. Specifically, the foundation setup that's offshore. And I'm actually happy to announce that just last week we formed X1 Labs, which is an American Delaware corporation that basically employs the engineers that work on X1 blockchain. And you can see that in one of my tweets. If you go to my Twitter feed, you can check the announcement there. So like scroll up a bit. Yeah, there we go.
This one right here. Yeah. Okay. I see it.
Yeah. So it's kind of like one of those interesting milestones that you do need to have a company that has legal corporate protection for the founders and engineers to work there.
Very similar to IOHK and Cardano.
Similar and different. I would say it's more similar to Solana Labs, or actually they're called Anza now. So Anza is an American company that employs Solana engineers that build their validator code. So yeah, just got a Cybertruck yesterday.
I'm looking at the background and that undisclosed location. That's all.
Yeah, I did anybody tell you I live inside a volcano, just like Dr. Yule?
I actually talking to you, I believe it.
Yeah, and I also have those monk seals with laser beams, and they're ill-tempered monk seals. It's from Austin Powers.
Okay, I totally get it. Yeah, you're an interesting guy, Jackula.
Thanks.
Okay, so yeah, let's get so are you aiming? Is there like a rough time?
I would say roughly like early 2015 is the TGE event, token generation event, basically. So when the chain launches
2015.
15, yeah. Well, I am a vampire. Those decades are nothing to me. 2025.
2025. Okay.
This coming year.
Are you thinking though like Q2, Q3, or is it gonna be like Q1? I'm not trying to pin you down. I'm just trying, and I'm not asking for a deadline or a date. I'm just trying to get roundabouts.
If I knew for sure, I would probably just like mention it. But because
I got you,
I
appreciate the honesty.
We just got this company up and running, and we have like a fleet of lawyers helping us to set it up properly so that the Uncle Sam does not.
Please set it up properly so you don't get because we're not even sure 100%. We're recording this on the 16th of December, but we're not 100% sure who is going to be heading the SEC, because it looks like they're trying to push somebody in right now before Trump takes office. That doesn't seem to be very pro crypto.
There's a lot of things in the air, though. I don't think SEC's situation is going to block us in any way. It's more like let's set up.
The Senate was considering Caroline Crenshaw, and she's
I heard about
apparently. Whereas Trump, I can't remember the guy's name, but I think he was one of the VC investors from Solana, from what is the All In podcast or something like that.
Yeah, that dude.
Yeah,
though he's already been chosen as a crypto czar.
Oh, the crypto czar. That's right. It wasn't the SEC. It wasn't.
Yeah,
it was somebody else. I think it was somebody, a former SEC chair.
It was Sachs. I think his name is Sachs.
That makes sense. I'm sorry to derail. Get off track with the conversation.
Yeah. Sure,
so ultimately, what made you decide? I'm not sure if this is just your decision, but what led to the creation of the X1 blockchain, and what is separating the X1 blockchain from other existing layer 1 blockchains?
So I actually think it's very similar to what separated Zen from other tokens. It's basically the aim towards decentralization. So specifically, we want X1 to be one of the most decentralized chains out there possible. So we're actually setting it up as such where it could have the best Nakamoto consensus among other chains out there. And by the way, Nakamoto consensus is a factor of how many nodes can censor or go down to disable the chain or manipulate the chain's ledger. And so on Solana, the Nakamoto consensus is only 29 nodes, even though the number of participants is about 5,000. So 5,000 nodes in the network, and it only takes 29 to start censoring transactions. On Ethereum, it's actually only 2 organizations. It's I believe Beaver Build and something else. I forget the name. I think it could be Ledger, but probably not Ledger. There's also like Lido that's heavily present in the block building consortium of Ethereum. So Ethereum is actually a lot worse than Solana in terms of like its decentralization. People think Ethereum is so decentralized, but the reality is there's only 2 largest block building organizations that can totally censor
A question:
anything.
before, prior to Ethereum going to proof of stake, was it more decentralized?
I actually think it was. And the biggest centralizing factor for Ethereum was this thing that called PBS, Proposer Builder Separation. So Proposer is a validator or a node that proposes the block, and then the builder network is the one that's centralized, that actually extracts the MEV from the block, pays a portion of that MEV to the block proposers, and then releases the block into the network, basically. And so there's only 2. Like on Etherscan, if you like search in Google Etherscan block builders on Ethereum, you will actually see the chart where you can see decentralization just expanding. You'll probably have to use Google or go to the homepage, and there's like a
Okay,
place.
I trust you. I trust you.
Yeah, it's an interesting chart. So um, Nakamoto consensus is very important for decentralization, which is important for value. It's important for fairness. X1 is aiming to be one of the most decentralized chains through the economic modifications that we're proposing. So specifically, one of which that you don't have to pay to the blockchain to participate. So all of those nodes that you see on the map right now are actually don't pay anything for the consensus messages like they do on Solana or would have done on Solana. So that actually lowers the barrier to entry to get into the chain, which is awesome. Secondly, there's a problem with proof of stake, and that problem is that the richer you are, the more blocks you make. Okay, and that's a
Right? Yeah.
problem
Yeah.
because
That's
you're
right.
paying your way in, and de facto it becomes the tragedy of commons where you're attempting to corner the network, but the network as a whole suffers from that position. So if somebody comes in and stakes $100 million or $1 billion, they can, in a general purpose proof of stake network, they become the centralizing force around the block production and block proposing in one way or the other. And so again, this is common to all of the POS or proof of stake networks. So what we're doing in terms of consensus is we're implementing the difference where it's not only the stake that matters, but also your social standing within social and technological standing within the community. So in other words, you have to produce the blocks without skipping. So if you look on the right hand side of a column, right there where it says epochs last 500, look at the skipped blocks. So you see like number 3 is like really bad. Their skip percentage is 4.5%. You see that like on the last column it's 4.47.
Yeah, where it says 897 skipped.
Yeah, and then move to the right, you can see 4 no,
Yeah,
to the
yeah.
right.
The
So that
percentage
actually
skipped.
is the metric of how well they're making blocks. So they've been elected to produce a block, but 5% of the time, roughly, they skipped their turn. So in other words, they were unable to make a block. And so this metric will actually will reduce your score, will reduce your relative score to the other nodes. And this node
Right,
will be
because
driven
you
by
don't have reliability.
exactly. So the reliability plus the stake is what pushes you higher.
So like someone like this with 0 skip, 0% skipped, they're going to place higher.
Exactly. So like we can compare that the person with the number 3 person, his stake is what, 8%? It's actually like active stake right there, column in the middle.
Oh, in a column in the middle, active stake right here. Yeah,
Yeah, you see how
8%.
it says 8% right there?
Yeah, this is very detailed.
Yeah, so if you compare it with people below who have 0 skips, they have less of a stake. And so generally in Solana, the more stake you have, the higher you are on the leaderboard for block production. But the changes we're making actually will promote people who are better technologically and push them higher. There was like one with 30%. Did you see that one?
No, 30% for the skip percentage.
Yeah, the last column on the left.
Yeah, I'm trying to look through. I see
Yeah, there it is.
25. 25?
25. Yeah, 25. Yeah, I thought it was 30. But anyway, so like this person may have just rebooted the node, and immediately you could see that the network tried to give him blocks to produce, but he was not
Yeah,
available to do it.
that's crazy.
Yeah, but the rest of them are really good, right?
But here's
And
a
so
36.76.
yeah, but this guy's grayed out, so I think he's down right now.
Okay, is that what that means?
Yeah, he went down, but the network tried to give him blocks to make, but he wasn't available to do it. So we accounted
And
for
this is all in a test net.
exactly, yeah. But it is a full-fledged blockchain. Like you can do
Right.
everything on X1 that you can do on Solana. And so the consensus changes will further remove the centralization forces on the chain by taking not only your stake amount, but also your performance.
Who's
And
this guy?
so I don't know. Who is it?
It looks like it might be you.
Yeah, that's one of my nodes, and I think I only have one right now. So that's the one. Do I have
I
any
mean,
skip?
it's a fair launch. It's a fair launch that you're doing, right?
Yeah.
Yeah. So I mean, you should be able to get involved in the ecosystem just like everybody else. And a fair launch means that there's no pre-mined. Right. I should ask: is there going to be any pre-mined coins for this particular project, or is it 100% fair launch?
Well, let's actually dive deep into that because there's a lot of misunderstanding in terms of what pre-mine is and how things work. So when you launch a token, you can have a smart contract that actually stores no tokens to begin with and there's no owners. Okay. You can do that, and then everybody interacts with this contract and start minting tokens for themselves, just like they done with Zen.
Okay.
When it comes with a blockchain launch, there needs to be a pre-mint of tokens, and that's what we call the TGE. And
Token generation event.
yes, because you cannot launch a chain without tokens. There has to be 1 billion tokens minted first. And then those tokens are distributed among the community members. Like there may be something for the team and something for other people out there, maybe partners. Who knows? Like we haven't really decided that point. So you launch with 1 billion tokens minted. You distribute them, and obviously you communicate how you're supposed to distribute them even before launch. So we're gonna get to that. Then every year, the blockchain has this thing called inflation. And generally for Solana and for X1, it's going to be 8%. And so if you're staking your tokens and you acquired them through, like, let's say, either an airdrop or some sort of incentivized mint or community drop, whatever we're going to call it, or you just bought them on the market, you're always encouraged to stake those tokens because you will capture that 8% rewards by staking your economic energy into the validators. So by staking into the network, you make the network more secure. And how do you make it more secure? Well, it's because the nodes that you're staking into, you're giving them your vote that you think that they're performant and they're legit and they're good actors. If they disappear, you can unstake and restake it to someone else who is better. Because if they disappear, then your money actually, your coins don't make any rewards at all because there's no activity from that node. So this staking de facto represents voting into the validity of the node online, which makes the network more secure. And so 8%, that's what you will be able to get. If you're delegating, and this is a delegated proof of stake, so you can delegate to any node you like. Like, for example, if I run a node and people like me for some reason, then they can delegate to me. They make that reward of 8%. Now, if a person chooses to run a node and basically further decentralize our network, make it larger, we are actually going to, or rather, the network will give them another 10% on top. So you make 8% for your staking plus another 10% as a reward for being a node in good standing. And a node in good standing would be a node that actually runs without skips, without errors, stays online, etc., etc.
Okay, that makes sense. Now, is Solana in its current entity? Is it delegated proof of stake?
Yes.
Okay, it just has all these other barriers that go along with it.
Yeah. So
which
if
you guys have eliminated.
If you are delegating to Solana, there's actually no extra cost for delegation to Solana. You can choose nodes that you can delegate into. You don't pay extra to
Okay,
anybody.
it's just the person running the validator node itself.
Exactly. It's the barrier to entry for running the actual technology to decentralize the chain. That's where the majority of the problem is.
Okay.
And so we want our chain to be so decentralized that we would have the largest Nakamoto coefficient, meaning that if we're running 1,000 nodes, preferably it will take 350 nodes to collude to take the network down, which is a lot. So on Solana currently it's just 29. On Ethereum it's really just 2. And
to take out the network?
Yeah.
2 on Ethereum and 29 on Solana?
Yeah. So on Ethereum it's 2 companies. If they decide to collude, or let's say that they load the blacklist and your Ethereum address happens to be on the OFAC blacklist, your transactions will not be included in the block. So they have that power today.
Yeah, no, I'm aware of they're able to freeze funds, and it's in that centralization that goes along with the stable coins too. It's why, just a quick side note, stable coins are the same thing as a central bank digital currency because they're all programmable currencies. That's what people need to get to understand, because you can Tether and USDC have both worked with 3-letter agencies and frozen people's accounts.
I totally agree. I mean, like when it comes to stable coins, the assets that back those stable coins are actually in a bank. And if you want to be unbanked, you wouldn't be using stables, because Tether actually buys government treasuries, and USDC was in this Silicon Valley bank that went belly up like about a year and a half ago, or maybe a year ago. And what happened to USDC? Well, it actually stopped functioning, or it was functioning, but it was like really depegging to 65 cents on the dollar. Now the question is, you're thinking that you're holding this USDC crypto that's pegged to $1, yet it actually pegged to a bank that failed, and it lost value.
That, and it's backed by treasuries, not dollars. So I mean, and that's the thing about the idea of stable coins, is they could, if they want to go digital and get rid of cash, they could eliminate the US dollar and just have stable coins as the representation of that.
Well, dollar is already digital. I mean, all
there's
the wires.
It's not 100% digital because we'd still have physical cash, but you get what I'm saying. I didn't mean to detract much. I just want to explain to people. I try to emphasize, because a lot of people think, oh, central bank digital currency is bad, stablecoin good.
Yeah. No, it's pretty much the same thing.
No, it is the same thing. I mean, if it's a programmable currency, it's a programmable currency.
Yeah, it's the difference between that and that is that one is like the government controlled entity, and the other one is a private company that may listen to the government and censor you anyway.
Yeah. No, you're 100% correct. I didn't mean to interrupt and go on that tangent.
Sure.
I just think we share a lot of those same values, and that's why I was also bringing that up.
Yeah, thanks. Yeah, we were definitely aligned on that. So anyway, so with X1, we want the highest Nakamoto coefficient, meaning that one of the most decentralized chains with the lowest barrier to entry for the validators, and the least cost of actually running a node. So
I'm sorry, I didn't realize you were completely done there. No, and again, I like what you guys are aiming for. I'm really looking forward to diving into this in a little bit, because now that I've got a better, like talking to you, I have a better understanding of how these things are separated. I wasn't sure how I wasn't sure if they were all part of the same ecosystem, meaning Zen Crypto, XENblocks, X1, all the things that you've, all the different products and stuff that have come out from the Fair Crypto Foundation. So after talking to you, it definitely gives me a complete better understanding. So you have piqued my interest, sir.
Thank you.
Um,
Yeah, we're super excited. So we just finished the incorporation for X1 Labs. X1 Foundation is next, and it's probably going to be Cayman Islands. And there will be other superstructures that actually will protect the value of the coins within the X1 ecosystem.
which is good, I think, to have all these things in a place before there is an official launch as well. So that makes sense.
Yeah, 100%. You want to be, cross all the dots and check all the T's.
And
How
then
they say it.
you have the test net, which is basically just the actual X1 blockchain, but just a separated version, a canary network per se.
Yeah, I mean, like nothing's stopping us from basically changing the name of X1 testnet to X1 mainnet, and it's going to become the mainnet. But there's so much to do. Like, for example, Zen assets out there will convert to X1 tokens on the blockchain. So if you're holding Zen, you can actually will have this opportunity to burn your Zen, make it disappear, make it deflationary, and the burn points will contribute towards X1 allocation for the community, for the Zen community. So that's like one of the key factors that people are excited about.
Is that, without getting into like complexity of it, is that similar to the sacrifice method that took place under the Pulse ecosystem?
No, because the sacrifice money actually went to the founder.
Oh, I didn't realize. I thought it went to nonprofits. No, that's why the founder's in trouble, man. I've interviewed Richard, and yeah, I love Richard, but
I love Richard too. I think he makes a lot of sense, and I really enjoyed our conversations when we had them because I was invited to talk to him at some point on the Pulse Chain conference.
very cool.
I mean, like the difference between a sacrifice and like here's the thing, I never actually said that any sort of like a sacrifice ideology is bad. I think people should do what they believe they should do. And if they want to do that with their money, that's completely up to them. That's what crypto was designed to be.
I thought the sacrifice money was supposed to go to like these nonprofits, like health, mental health, like things like that. Like, I didn't get too deep into it, but that's what I thought I understood, and I could have been wrong.
So I'm kind of like part of the Hexagon community on the periphery. I talk to those guys. And I think the common understanding that the sacrifice money was supposed to pump Pulse Chain. So, like, in other words, give more economic energy into the chain that actually will accelerate its value generation for the community.
Right.
So that's what everybody knows that was supposed to do, or maybe there's like a hope is a better word. So because people talk about it, like there's this project called PDAI or Pulse Chain DAI, which is the
fork of Ethereum DAI that was on Pulse Chain.
Everything
forked over.
It's a fork of MakerDAO. And so PDAI is currently trading at like 1 cent on the dollar, and people are excited about PDAI actually potentially hitting $1 when Richard presents collateral in MakerDAO that actually would push PDAI to $1.
Yeah, because I was going to say, what would back up these stable coins to actually give them any value?
The sacrifice money, of course.
Of course. Yeah. Just, I mean, now that was my only, and I didn't mean for us to get here, and I'm not going to keep it long, but my only issue with the Hex launch was the way that you would have minted your Hex was based off a snapshot of how much Bitcoin you owned at a certain time. And then you could mint your own Hex. That would have been fine. That was completely fine. But the other side of being able to obtain Hex, which was sending your Ethereum to address 1 and receiving Hex in return, I knew where that was going. And
well, it was going towards somebody's wallet.
Right. And that I think is what probably caused the unnecessary SEC issues.
Well, you could push back on that and say that when Ethereum launched, they actually did a public sale of Ethereum by taking people's Bitcoin and issuing Ethereum at $1. really not that big of a difference there. Though
No,
Ethereum,
they said Ethereum had enough time to decentralize its network to where that was their bullshit excuse to not
yeah,
go
yeah. I
after
mean,
the ETH gate thing is what people call it,
yeah,
I guess.
Ethereum is a security because Ethereum Foundation during many years promised the value creation for the ETH as token. Like they would say, we're doing this. Here's our roadmap. It's going to affect Ethereum's value.
Okay.
And
Okay. See, I wasn't around then. I got involved in early Q2 of 2017.
yeah, and so when you promise value over share of common enterprise, you're failing Howey test,
Yeah,
which
because
makes
you're promising a return on
Ethereum.
investment.
Yeah, yeah. And so Ethereum basically at that point becomes a security. Now the question is like securities by themselves are not illegal. It is the sale of securities to unaccredited investors that's illegal in the United States. That's where SEC could potentially persecute anybody. But like right now, things are probably
No, I don't think. I think
not gonna work
I'd like
out.
to think that we're past that, and I'm glad that you were involved. Since I mean, if you were mining in 2011, then you obviously involved with Ethereum kind of like since the get go. You have a really good, clear understanding. You got to experience the 2017 ICO craze. You got to see after ICOs, the IDOs and IEOs and EIEIO. All the
So
old McDonald had a farm.
yeah. So given that we're on topic, my personal uh, stake in this is I do not believe ICOs should be illegal. I do not believe sale of securities should be illegal to unaccredited investors. I do not believe the government should be between me, my money, and my choices. And so none of those things, like whatever Richard did or whatever Ethereum did, I think everybody should do whatever they want. And if somebody hasn't been done enough education to participate in a scam, well, it's going to be an educational experience for them. But I
Tough
don't think,
titty.
yeah, I don't think the government should be between me. Like, I don't want it to be my warm blanket that protects me from the world.
No, I agree. I agree. Now, so something that, and I'm not going to mention this individual's name. People may know who I'm talking about, but someone was trying to introduce legislation. I don't know if it was I think it was on a state level about unaccredited investors and trying to change how you designate that and basically make people take like a test. So you understand what you're getting into, so that you understand how these things work. You understand that you could be losing money, all these different things, and that what you're getting into. And if you pass the test, then you can go ahead and invest in whatever. And it's not something crazy. It's just making people aware of what they're probably not aware, because our education system does not teach us, any of us, this shit.
Yeah. So I think there probably should be like a chat GPT that asks you a bunch of questions and then tells you like maybe you should reconsider jumping into this because you do not understand certain fundamental things. And I think it would be more fair way than like some company organization that actually tests you and acts as a gatekeeper. I think the participation should be suggestion and those tools should be widely available and be like as most decentralized technology out there, and people should have access to education so that they do understand what they're getting into. But I don't think the government should be there and calling things illegal and then persecuting companies for doing illegal things.
You
Like there
sound
was
like
like
I was gonna say, you sound like a free market capitalist or a fellow anarchist.
I don't know what I am, but like I have seen like so many idiotic things out there. It just makes me believe those things are stupid. Like Eigenlayer, you probably heard about them. They made it so the token distribution model actually does not is not allowed for United States citizens. Like if you're a US citizen, you just cannot even participate.
Yeah,
And that's just like so stupid. Like why? It's
that's how
like
EOS was the same way, but you could obtain it on an exchange.
yeah, I mean like there's so many ways to go around it where you're actually putting yourself in more danger. And of course, like you can always bypass things with VPN. And so
Second citizenships. There's all kinds of things that people can do.
yeah, but all of it is just this sort of like retarded waste of time. I think we should be more decentralized and more self-governed and self-sovereign on both individual and team level. So
Agreed, man. Agreed. I'm glad we've had this conversation, man. It's been a pleasure getting to know you and to learn about what you've been doing in the crypto ecosystem. And I'm definitely going to have to do a deeper dive into what X1's all about. Me and you have to stay in touch so I can do some more follow-up interviews and kind of deep dive into some of these things. I'd like to know a lot more about X1 because I can see that's where a lot of the focus is going to be. Is there anything else that we didn't cover that you wanted to touch on this initial conversation in regards to X1 itself?
I think it's a pretty good introduction. We definitely probably should dive deeper into a few things here and there. I think like ultimately we're super excited moving forward because we have a giant community. There's 500,000 wallets that hold Zen. There's a million people in the community that are aware of Zen because we were just on so many chains and just like touched so many people. So I think X1 is definitely going to be a wild success just because it's borrowing the best parts from the total crypto ecosystem and focuses into this like one product. So, and we had the chance to look at every blockchain to understand the issues and limitations of each, including Solana. And so we're trying to build something that's best in the from all the worlds out there.
I appreciate it, man. Again, I'm definitely looking forward to us being able to communicate more and me learning more about everything that's going on. Before we wrap things up, one thing that I did want to touch on, I'm glad that you talk about these first principles of crypto, and this comes from the Zen X account. It was the header picture that I was showing earlier. One thing that I really liked about what you had talked about with the creation of these coins of Zen on different blockchains is once everything's created and done, the admin keys are burned, from my understanding.
That's right.
Now, a lot of people don't understand admin keys, and you brought up the fact you brought up Polygon, formerly Matic, and that's a good example because I've tried telling people as much as I do like Polygon, and there is a time and a place for centralization and decentralization, and I know that there's different levels of both. But the fact that a project has their admin keys means that they could do anything within that ecosystem. And I think that would even mean burning all the tokens, taking tokens out of wallets, freezing funds, all kinds of things like that. So I tried to explain to people, not that it's malicious necessarily, but a project like Polygon is centralized because they do have possession, from my understanding, of their admin keys. They did not burn the keys. By burning the keys means that you can't go in and alter the code, from my understanding.
So actually, there's a very important disambiguation between smart contract admin keys and the owners of the chain. So when it comes to admin keys for a smart contract, you can actually change smart contracts functions. Like, for example, you can increase supply, or you can stop the contract from accepting new users, or it can freeze your account of holding tokens or doing anything with the tokens. That is centralized access to a smart contract. Even if it lives on a decentralized platform, the ability to have keys there manipulates the tokenomics of the token itself. When it comes to blockchain centralization, it has nothing to do with admin keys because there's no admin keys with open source. Open source is open source. When a blockchain is centralized, that actually means that a single entity can make a decision what to do with the blockchain. Put you on a blacklist, stop some tokens from existing, reorder the ledger completely, and change the ledger so it's not immutable. And so that's basically the majority of L2s today. They can just change anything they like. So
any one individual could change, even if they had a disagreement and one person had access to it, one person could change it.
Well,
is an ERC20 token creation a smart contract?
It is.
So yeah. So everybody who creates an ERC20 token is going to have it. They can, if you burn your admin key, can you make changes?
Well, it depends. If you're Arbitrum is this single node. and you launch a token on Arbitrum that has no keys, Arbitrum management can delete your token. So they don't need any keys for that because they own the chain, they own the ledger, so they can just make the ledger that has your records disappear.
Right.
No
Blacklisted,
keys,
like you said.
no keys required, or like literally delete you from existence.
Wow.
So that's what happens when the chain is centralized. Majority of L2s are centralized. Polygon is centralized. I think Binance chain runs like maybe 5 nodes or maybe 6. Also super centralized, can also delete you out of existence. And so you can see how there's a difference between admin keys to the contract and actually owning the ledger. And so in Solana, for example, the community owns the ledger, but 29 nodes can collude and stop transactions from running, or can reorganize the ledger and fork off, kind of like become a different chain.
Is that how they were able to pause? I don't know if that's the right word. Their blockchain when they had the Solanas had issues, like where the blockchain has basically just been shut down.
So that's actually a very popular belief that they can pause the chain. It's actually not true. Solana cannot pause their chain. They can only say that we have a bug, we have a new version of the code that everybody should update into. Can you please go ahead and update? And then once everybody updates, there's a consensus that there's the new code that's legit.
Okay.
The chain just switches to that code. Anytime the chain stopped, it was actually a bug that stopped the chain from working. It wasn't that they turned it off. It was literally a problem that disrupted consensus and the block production.
That makes sense, but that also doesn't sound very good.
It sounds fine on the chain that's continuously developing. And there's many people that are working. There's like 75 people on Solana's.
Well, something like that has not happened. I'm just tell me if I'm wrong. Has something like that happened to Ethereum, or did Ethereum just get clogged up and the transaction fees just got to be outrageous?
I often make a joke that Ethereum is so slow it has an outage every 15 seconds. Because you're waiting for transactions to actually happen, and a lot of times they actually don't go through because they time out.
Okay.
And so Solana just runs so much hotter. It has a higher chance of tripping over because any sort of bugs can have cascading effects on the nodes. So in our earlier part of the conversation, I mentioned that when you run Ethereum node, you spend maybe about 5 or 10% of the node's capacity. So you have 90% of capacity to burst into if you wanted to. Solana runs at about 80%. So they only have 20% left. So if there's a bug that requires the node to burst up twice the capacity, they just don't have it. And so the nodes keel over and the whole network stalls. But that's just because they're running so quick.
Yeah.
You can also imagine like riding a car on the road and there's like sharp turns coming up. A car that's slower will be able to navigate, but the car that's too fast is going to smash into the wall. So.
No, you explained it so well, man. I mean, and actually, being involved in crypto, I've learned a lot talking to you today. So I mean, I appreciate you sharing this information. Because I definitely had a little bit different of a look about how admin keys worked.
Yeah, I mean, it's a very common misconception. Admin keys only relate to smart contracts, but if you own the chain, you own everybody's admin keys.
I figured that. I know when I meant admin keys, I was mainly meaning like projects that build tokens on other blockchains.
Sure. Yeah, and that's the majority of what people think admin keys are. Yeah.
Well, again, man, this has been a very enlightening conversation. I thoroughly enjoyed it. Everything that we talked about, everything that I screen shared, I will have linked down below. And I definitely encourage people to do a deeper dive on not only Zen Crypto, on XENblocks, but also the X1 blockchain, because the documents website for X1 is very in depth. And I mean, I don't really think we've really touched on a lot of what X1 blockchain is what you guys are building. So that's where I think that's where I want to put a lot of focus on X1 in our next conversation. And then, as we're doing that, I'll think about some other things we could talk about in regards to Zen Crypto and some other things you have going on. Do you have any final thoughts, anything that you might want to add to the conversation before we do wrap things up?
Just shout out to validator community, running at an incredible pace, updating the code, testing the nodes, building on a chain that's still in the testnet. I think we have a very bright future, and I'm very excited to get there.
Well, thank you, my friend. Again, if you could just bear with me 1 second, I want to do a quick wrap up and stop the recording. So, ladies and gentlemen, again, I'm going to have everything linked down below for everything we talked about on today's show. I always encourage everybody to do your own research, do deeper dives, but I will be doing future conversations with Jack, and we will do a deeper dive into what X1 blockchain is all about and everything that they're going to be building so that everybody can know, because knowing is half the battle. Before we wrap things up, make sure you're subscribed if you're not subscribed already. If you are subscribed or think you're subscribed, make sure you're still subscribed, because YouTube has been massively unsubscribing people from the channel. So make sure you're still subscribed, hit those notification bells. And as always, I encourage you to be a blessing to others. Treat people how you want to be treated. Be the glitch you want to see in this matrix. Be the change you want to see in this world. Until next time, know yourself and question everything. Much love.